Hi friends, this is Nitish, founder of Stockmock, and welcome to yet another episode of the podcast series where we invite our guests to share their journey and learnings with us. I'm personally enjoying the entire session of this podcast series because while talking with so many traders, I'm getting to know the insights and my learning has reached to a next level. So I'm also expecting that through our conversations some of the learnings is being instilled in you as well, and that is helping you in one way or the other in your trading journey. By the way, we majorly talk about psychological aspect with our guest because we feel when we talk about systems, strategy is just one aspect of it, but psychology is equally important or rather more important when we are talking about being in this market for long period of time. So that is why I urge all of you to listen to all of our interviews because everyone has something to offer around psychology, around systems, because they have been in this market for long period of time. And so today we have invited our guest who is very popular on Twitter, on Quora, on many other platforms as well. He is Kirubakaran Rajendran, who is not just a trader, who is in this market for very long period of time. I consider him as an entrepreneur as well. Why do I consider him entrepreneur? Because he loves to build products. He loves to share his knowledge through his content on Quora, which we will talk about in detail when we are having a conversation with him. But before I invite him, I request if you are new to our channel, please don't forget to hit the subscribe button because once you subscribe, you'll get to know that yes, you are liking our content. And if you have any improvements or anything, any suggestions you have for us, please do let us know in the comments. Okay. So let me now invite Kiru Kirubakaran Rajendran. Hey, hi Kiru. How are you,
Hey,
bro?
hi, Nitish. I'm fine. I'm fine. Thanks, man. How are you? How are you doing?
I'm doing pretty great. By the way, the first thing that I see is just keep buying. What's that?
Yeah,
What do I buy,
that
man? Everything is falling.
that is the new book that I recently read. I know very specifically few books that I really love, and this book is from Nick. Actually, Nick he runs a separate website called Dollars and Data. He's based out of US, and this guy is completely a data-driven guy. And he did so much of research about investing, about long term and everything, and he compiled that as a one whole book with some 15 different chapters explaining about various metrics. Like people always do research on what is the right time to buy, what is the right time to exit, what is the best combination that could give you high returns. Is momentum is good, or is mean reversion good, or should I buy a stock, or should I buy an index only when the market dips? So they do all this kind of research. Even I used to do all this kind of research. But Nick, based out of 100 years of data from US markets and other markets, he concluded that whatever things you wanted to do, you could try it out, but nothing will beat if you just keep buying the index every single month. So that is what he concluded. So a person who wanted to create wealth on the long run, just keep investing every single month on whether on a blue chip stocks or on an index stocks. And once you keep doing it, irrespective of whether the market is dipping or not, eventually you would be able to make higher returns than all these momentum portfolios or all these different kinds of analysis that people are doing. So I really love this book. It after the Psychology of Money by Morgan Housel, this is the book that I recently read and I really loved it.
Wow, nice. So when you say keep on buying the index, you means going with Nifty Bs, buying Nifty Bs.
Yeah, be it Nifty Bs, Bank Bs, or Gold Bs, or any kind of index. If we are I don't think whether it is possible to buy Vanguard index for from Indian investors. But no, I would recommend you to invest with be it ETFs like Nifty Bs or Bank Bs, or with any kind of index funds which invest in Nifty 50 or Nifty, next to Nifty 50.
Okay,
So
okay.
what I have observed is like it has generated on an average of 14 to 15% on an average over the long run. And second thing is there is already a proven stats which shows that 85% of the fund managers can't beat index in the long run.
Wow.
Even Warren Buffett himself has said that.
Mhm.
So the odds are completely against retail individuals, retail investors who wanted to invest in the markets. So like they always think, okay, if I pick my own stocks, I would be able to make higher returns. If I pick my own fund managers or own specific mutual funds, I could make higher returns. But the stat is you are well off if you're investing only in index and then rather on not trying to do all this complex analysis. So that is what no, I always prefer. Even I do with the index funds as an SIP. So what say with salaried guys and with non-salaried guys, the difference is by the end of even before the end of the month, the salaried guys exactly knows how much they are going to make. But no, people like us, we do not know what we are going to make by the end of the year through our business. So it's always volatile. So salaried guys can always set up, okay, this is my money that I can keep investing every single month. But with non-salaried guy, sometimes you can invest, sometimes you might not invest. But I always keep a thumb rule of investing 20% of whatever money that I'm making from business back to SAP. So I always keep this as thumb rule. So if I'm making 1 lakh a month, I'll invest 20,000. If I'm making 2 lakh a month, I'll invest 40,000. So it keeps oscillating, but I'll keep on investing every single month.
So you're doing SIP with X logic, let's say 20% of your logic, and salaried employed and non-salaried employed, based upon what they're earning, they can do the same. By the way, this is
Exactly.
the first time, Kiru, this is happening that we have not asked somebody about their journey, and we started with the question first. So don't mind that first, okay? By the way,
Fine.
Kiru, I want to talk about that. I introduced you as an entrepreneur as well. Do you agree with me, or do you also see yourself as an entrepreneur as well? And
Yes, definitely. You see, I never thought that first of all I would be a trader first. I never thought that I'll be getting into trading when I started some 10, 15 years before. And also, I always wanted to be an entrepreneur. I never know that I can become an entrepreneur through a trading industry itself, but I always tried multiple things. For an example, I created a small company called innerscart.com.
okay,
This is when I was working in Bangalore, where me and friends, my roommates were there. One day, they said, Macha, there is no jockey left, in my room. We have to go and purchase jockey. So
okay,
this is the plan for Sunday. We thought, okay, we have to go to the Total Mall, which is nearby in Bangalore, and we went there and just for shopping jockey. In a way, we went there and we bought it and came back. And that night, I was telling, this was back in 2010, I think, before even Flipkart, Amazon, and all these people came into the picture. I thought, why don't we have an exclusive website which could only sell inners for men? So
okay.
branded innerwears like Jockey and all these companies for inner men. So I created innerscart.com. But anybody could come up with an idea, but the execution matters, right? So then I realized, okay, in order to execute this, it has to be a large scale industry. Like you have to deploy a lot of capital, you have to build a site, and there is logistics involved. You have to courier those things. So but I really liked the idea and I wanted to try it out myself. My friends were not supporting. They said, no, this doesn't work. It could take a lot of time and effort. Then what I thought is, I'll do the selling in eBay. So whenever order comes, I'll just buy from a jockey showroom and I'll sell it in eBay. But in order to make people buy from eBay, I have to sell it at less than the market price. So if you are going to buy at a jockey showroom, if it is selling at 200 rupees, I'll sell it 180 rupees. I'll sell it for 20 rupees discount. Not in order to make money. I just wanted to know whether do I really love this process of this entrepreneurship. So that like buying it and then selling it, someone giving you positive feedback stating I bought this from the seller, and then couriering it, doing the logistics by yourself. I just wanted to understand the overall flow. So I did that for some 6 months and I enjoyed the process. And eventually, I can't keep selling it at a discounted price, right? Because it is my own money. Eventually I stopped it. But that was this initial period of my own little entrepreneurial journey, but I loved that process. Then eventually, when I was into algo trading and trading was making money, and then I thought, okay, if we completely change that and make us a solution and give that as a solution to users, because this is some kind of problem that every single trader would face. So if this is solving my own problem, it could solve the problem of the complete traders community. So then that is when I started developing these trading boards and everything.
Wow, nice. And your first trading related product was bots, right? Algo trading
Yeah,
bots,
square of trading bots, right?
which was completely automated version of a strategy. So basically, you were more inclined towards rule based trading than other way around.
Yeah, right. Like I was a new space trader initially. Like, when I started trading, most of them will not get started with the system. As far as I know, no, anybody who will get started with the trading, either they'll get started with trading because some their friends said so, or they'll read some news based on some news channel, or no, whatever the information that they get through, whether through social media, news channel, or newspaper, they get to buy those stocks, sell it after some time. So they keep tracking what is happening around them, and make their trading decisions. So no, like it will be completely random. Sometimes it will make profits, sometimes it will not make profits. But it took me almost 6 years to move from news-based trading to rule-based trading. Like after trying multiple things, I remember back then there was this forum called traderg.com. So in traderg.com, there will be multiple traders interacting with each other, and that was a period when I was first introduced to this software called Algo. I mean, Ami Broker.
Ami Broker. Okay.
Yeah, until then I did not know that there is a platform called Ami Broker, and no, there was one guy who I think it was between 2012 to 14, I think. So this fellow came and he's from Chennai only. He said there is this charting tool where if you just open it and it will automatically show when to buy and when to sell.
Okay.
This is how he promoted me with this Ami Broker. He was not trying to sell it, but he was trying to tell me there is this platform. It is free because no, you don't need to pay to use this tool because it comes with a free tool when you're trying to subscribe to any data vendor. They'll give you a hacked version. What is that? Modified without paying a licensing fee. You if you buy it, what do you call it as?
The cracked version.
Cracked version, right? So they'll sell you this cracked version, and you can start using it. That is what he said. And once I opened it, I could see it was a simple, super trend chart which would show you buy and sell.
Mm-hmm.
And when I asked him further, like how this buy is created and what logic this buy is created and what are the other tools, like if I just edit it, there are so much of formulas it is showing. How do we use it? And he did not know any of these things. He simply said, no, all you have to do is open it, run it, it will automatically show buy, it will automatically show sell. You just have to follow that. That is what he said. And then I started slowly digging about like what this platform is all about, what is AFL, what is Ami Broker, formula language, what is optimization. So it is like a new toy that was given to you so that you could start playing around it, and then you know eventually you get to know more about it. And that is when slowly the algo trading journey started. So it is all because of one random fellow who just told me about this buy and sell signal platform, which once I get into it, then I realized, okay, you could create your own rules. You can modify the existing rules. So instead of super trend giving you a buy signal and sell signal here, you can modify certain parameters, certain factors there, which could also change the buy and sell signal. And during those period, it was 90% of my time will be with backtesting. I keep on doing backtesting back then because that was the first time I could see, okay, if you just feed in some rules, it would give you the results instantly. So even though you have to write some couple of lines of code, what I used to do is I don't write the code from the scratch. If there is some moving average system I wanted to develop, I just go and Google it. There will always be some Ami Broker AFL would be there. I just have to change it, modify the rules, and then I just have to run it based on my own parameters. Back then, I used to spend so much of time to get that best backtest results. Like I end up finding what is the best moving average for Reliance, what is the best moving average for a TCS, Tata Steel. I was using, I end up doing optimization, overall optimization, but I did not know that I'm actually doing curve fitting back then. I thought this tool is going to give you the best results when you keep on adding the rules, and whatever the best results that you are getting, just go and trade with that so that you could get those same backtest best results in live also. Back then I was not aware of curve fitting, but this was one of the mistakes that every single rule based trader or system based trader would do when they get started with rule-based trading.
Nice. So you are into the rule-based trading for last couple of years, 5-6 years?
Yeah, from 2014 onwards, I've been a rule-based trader, rule-based investing.
7+ years. So if I may ask you about your experience with discretionary trading and the pros and cons associated with the rule-based trading.
See,
because I'll tell you why I ask this. Sometimes people feel Algo is a solution or is a money-making machine. So once Algo is in picture, I'll keep printing the money and I'll go to Goa and I'll go to beaches. I'll enjoy my life and the deal is done. So does that happen, Kiru?
No, not exactly, but that is how people sell a product. When specifically they are dealing with algo trading, like they will be saying it's food. First, they'll say it will completely remove your emotions, and second, they would say it is going to give you consistent results. And third, they say like you just have to deploy. You don't need to monitor it. It will automatically take care of everything. You can just go to a Goa beach and relax for yourself. But none of these three has happened when from 2014 to till date I've been doing algo trading. So none of these three things has happened so far. See, the thing with discretionary trading and rule-based trading is discretionary trading needs ample of no screen time and effort from your side.
Mhm.
So people who are there into markets for quite a long time. So every discretionary trader has their own process. It is not that they are doing the trading randomly. They do have a certain process, but because of their gut feeling or because of the number of years they have as an experience with the markets, they'll decide whether to follow that or not. So still they have the control over it. But with respect to rule-based trading, no matter what happens, no matter whether it is a Nirmala Sitharaman is speaking or Modi is speaking or RBI governor is speaking, you have to follow the rules. You have to take each and every trade as per the system. What system trading or rule-based trading or algo trading would give you is a kind of a more freedom. You don't need to sit and watch the monitors all the time. I don't want like if you check my screen time on Kite app, it will be less than 15 minutes a day. I don't monitor my positions every single day, every single time the market has been running.
Mhm.
And second thing is there is no error-free execution. Execution is the first thing. When it comes to algo trading, execution is the first thing because it makes butter smooth execution, no manual errors, and the slippages can be considered to can be reduced to a greater extent if you have those no robust execution engine mechanisms. And third thing is only when you follow a rule-based trading, you exactly know what to do, when to do, like when you need to buy it, when you need to exit it, what would be the ideal quantity. So every single thing is being built into that. So obviously you just have to follow a strict discipline. So be it like just like when you're getting into an army or when you're getting into a navy, they have a no rigid rules, right? They have a specific process. You just have to follow that process every single time, and then eventually you become know what you have applied for. That is what algo trading would help you out. But algo trading will not remove emotions at all, because it is end of the day it is your own money. So whenever you are trading with your own money, be it discretionary or algo trading, still the control is with you. So even though the machine is placing the orders, if it is placing a 5 or 6 continuous back to back losses, you will sit and think, should I still depend on this machine? Should I still depend on this algo trading? Will it really make money? Or probably I should switch on to paper trading for some time. I'll watch it and then I'll switch on to live trading. So the moment you switch on to paper trading, it will start making profits, and then
Mhm.
again you have to get back to live trading. So these kind of discrepancies, these kind of emotional imbalance will always be there. So the only way to remove, like I always say, 3 pillars of algo trading is trading strategy, having the right discipline, and having the right position size.
Wow.
Because 95% of the traders do not have a trading strategy,
Mhm.
and people who have a trading strategy, they don't have the right discipline to stick to the trading strategy, because after no streaks of losses, they lose faith in their system.
Right.
And the reason that they are not having discipline to that trading strategy is because they do not know how much is too much. So
Mhm.
they should have the right ideal position sizing, so
Mhm.
that even if you're trading with just risking only 1% or 2% of
Mhm.
your overall capital, then after 10 consecutive losing streaks, you will not lose much. You'll lose just overall 10% of your overall capital. So you'll be still be able to take that 11th trade in spite of 10 consecutive losing streaks. So that is what algo trading is all about. You have the precise rules of completely what needs to be done. So when that is taken care, doesn't affect whether you're in a drawdown of 3 months or in a drawdown of 4 months. It doesn't affect much.
Hey, listeners, this is a gold mine being shared by Kirubakaran through his experience of dealing with the rule-based trading for the last couple of years. And not just his experience. I think he's talking with the experience of people who are trading through his bots. The three pillars: trading strategy, you can find it on Stockmock. The second thing is discipline. I want to talk more about discipline, Kiru. Generally, how long does it take, as per your experience, for a person to become little disciplined in systematic trading? Because I think systematic trading is not easy to do, because once you are in losses or once you are in bigger profits in middle, probably you tend to cut your positions right then and there. So how long does it take, as per your experience? Because I think you've been dealing with so many people who are using a bots or your algo trading platform. So I'm sure you must be talking to many people. In general, average, how many months or weeks does it take for a person to become from a little non-disciplined to disciplined?
Okay, so now I'll tell you the real story of some. I'm not sure whether I've shared it with you earlier, but there is this person called Tony Saliba.
Okay.
So Tony Saliba is one of a trader who was being featured in the Market Wizards by Jack Swagger.
Okay.
So during the 1989 or 87, I think this book was first released, and Jack Sprague interviewed all the best traders out there, and published a compilation of interviews there, like what their trading approaches, how they have become successful, and everything in detail. So there is this person called Tony Saliba, who is an option trader, and he was featured in that book. And no, I was no, so actually I happened to meet him in a traders meet in CMT Association meet with Vishal Mehta. No, I went to Mumbai and I met this. Vishal Mehta introduced me to him.
Who is Vishal Mehta?
Vishal Mehta, who
Okay, kidding.
everybody will know about Vishal Mehta. So no, obviously he took me and introduced me, and then like I met him and I asked him this question. Like, no, you are now here. You have been considered as a famous person. You have been featured in a book. But what is that one instance which completely changed? Which is the main incident or main reason for what you are currently now? Then he said this incident, like when he started trading back then, he has to get a exchange seat from Pitt's exchange seat, and then you have to go to the pit and you have to trade from there. So he has to pay a lot of money just to get that entry exchange seat there. And he went there and he started trading with his money, and he almost lost a lot of his capital. The problem with him was whatever analysis that he made was actually right. But say suppose if he says that market has to go up, the market eventually went up. But before it went up, it went long down movement, and it corrected to a significant level, and then again it moved up. So end of the day, his analysis was right, but before proving him that he is right, it always took his stop loss. It always made him higher losses, and he couldn't withstand those losses. So what he said was, eventually he was down and he was about to blow up all his account, and he was left with some $5,000 or some $6,000 back in 1980s. So he had one choice. So what he wanted to do is he realized that, okay, I'm here to make profits on the long run, not tomorrow, not no day after tomorrow, or not next month, or not next year. I wanted to be a rich guy. I wanted to make money, but not immediately. So
Hmm.
in order to do that, I have to make sure that I follow the process. So in
Hmm.
order to follow the process, what I was doing was I was trading with all the capital that I have. Instead of that, I wanted to make sure whether I follow the process or not. So for the next 1 year, he traded only with one lot. And the complete exchange used to mock him like, okay, what this guy is doing, he paid so much of money to get the seat, but he has been trading with only one lot. Even he was being called as a one lot trader. Like the moment he comes in, people will call him, hey, the one lot guy has come. But he ignored all that and he traded only with one lot for the complete 1 year. He just wanted to know whether he follows the process or not. And in fact, by the end of a year, he realized that he could actually follow the process, and he actually ended up making profits also. Then he realized that so he was not able to make losses. I mean, he was not able to make profits, not because of his analysis were wrong. His analysis were right, but he was not able to make it because he couldn't follow the rules precisely. He was trading with the higher capital that he cannot afford to lose. The moment he reduced it to one lot and stick to the process for a year, he understood, okay, this is how the market behaves. When the market is moving up, this is how my strategy would work. When the market is moving down, this is how my strategy would work. So every single scenario was just in front of him, and he was able to adapt to it, and he was able to continue. Then onwards, from one lot to 10 lots, 10 to 20, 30, he increased it, and then eventually he was adapted to the process. So all it took was just 1 year of following the process, rigidly following whatever the system that it says. If it says buy, he'll buy it. If it says sell, he'll sell it. So that is what rule-based trading or algo trading is. So when the discipline would come, first thing when you have a process, when you have a no specific trading strategy, and second thing is having this discipline would come only when you trade with just one lot or two lots, even though you could afford to trade with 20 lots or 200 lots. In the beginning, always trade with the minimum that money that you could afford to lose, and then you will stick to the process.
Right. The same story is being shared by when we were doing the podcast, Kiru, with the conservative trader, Anand.
Huh.
He shared
Uh-huh.
the same story that this guy used to trade with only one lot and he used to call in Hindi ek lotia. Ek
Okay.
lotia means one lot guy. Okay.
Right, right, right.
And I was very impressed with that story when I heard it the first time. So, but this is a very, uh, you know, inherent logic that scaling doesn't matter. Even if you have a capital of, let's say, 10 crores, start with one lot, two lots. Throw yourself into the process until your psychology is developed. And this is so important. This is what I think is very much missing. Is very
Right.
much missing. Like people, before, it's like swimming. You can't just see, yeah, I can swim under 12 feet. No, you have to go swim for under 3 feet, 4 feet, follow the process and do so many things. And that's why this thing is ultimate important. I'll tell you, it took me 4 months to not, and my entire rule was I'll not touch my systems, you know. And this is what I think I discussed with Vivek Bajaj as well. Uh, Vivek said that it's kind of a karma theory. If you break your rule, punish yourself. It's very important, I think, Kiru.
Yeah, that is it. No, even know when someone is getting started with trading, be it trading boards, or someone says that I want to subscribe to Square of trading boards, I would always tell them, okay, you pick any trading boards, you trade with whatever the boards based on your risk appetite. But I would always suggest them to trade with one lot at least for 100 days, and I would ask them to journal it. Like say, suppose if you're starting with today, 17th of June, and you put a date, and next to the date, you give yourself a mark. If you're following the rules, give +1 mark. If you're overriding the rules, give -2 mark. So do that for the next 100 days. All you have to do is end of the day, find out whether you're sticking to the rules or overriding the rules. If you're sticking to the rules without interfering with the bots or without interfering with your trading strategy, give +1 mark. If you bring in your own no analysis, like, okay, the market is going down, but this is giving buy signal, let me close it. And if you're overriding it, even though it gives you profit, you have to give -2 mark. So do this for the next 100 days and calculate what is your overall score. If your overall score is less than 90, you're not disciplined enough.
Hmm.
If it is more than 90, you are actually disciplined enough and you can scale it up from one lot to two lots. So unless and until you break this barrier of 90 marks, you keep doing one lot. The moment you cross it, then you add additional lots and then trade it. So that is how you could become disciplined in those 100 days. Because in 100 days is sufficient enough to handle different expiries, different kind of fluctuations that market could give you, and you would be able to adapt. Okay, this is how a system would react during different kinds of market movements. Then you will have the discipline to stick to it.
That's nice.
And everybody want the end result is always people want or focusing on the money part, like
Hmm.
this is how much I wanted to make,
Hmm.
or this is how much I wanted to be, like this is the richest person, everything.
Hmm.
Like if I give you this question to you, like Warren Buffett and Nitish, okay, Warren Buffett is the richest person in the world, and he comes to you and says, okay, Nitish, you can become you can be a Warren Buffett, I can be a Nitish. Say, suppose you guys are swapping your roles.
Hmm.
No, he is giving you this offer to become the richest person. Would you take it or would you not take it?
I would love to take it.
Yeah, you would love to take it because obviously he has built so much of wealth. But the thing is, you can become a Warren Buffett, but Warren Buffett, his age is almost 93 now, so he is almost dead. But still, God forbid, let him live long. But the point is, see, even though you have been given a wealth of you are becoming a largest wealthy person in the world, but there is no time for you to live long enough.
So I
but
reverse my decision.
but Warren Buffett would be very happy to change, because he will be going to 30s and he'll be having 70 years additional money and 70 years of long time, and he could still build an empire from there. So time is something that we have, but people don't realize what you could actually do with the time. So even though the money you get, but what would you do at the age of 93?
Hmm.
Like, even though you have been given so much of money, would you be able to travel across all the world? Will you be having the same energy? No, not at all, right? But time is something that you have to give so much of importance to it. So even I myself have talked to more than 6,000, 7,000 people in my lifetime from the date I've started Square Off. Then from 2019, I think 19 or 18, I completely decided that I have to stop speaking speaking to people. Like I don't have any telephonic support. Back then I used to have a telephonic support, and even after I hired people to handle this support, I've told them not to handle telephonic support, because even if you're talking 5 minutes a day to a person, like it has consumed almost 30,000 minutes of my time. And in this 30,000 minutes, almost 500 hours, if you if you convert that, it is almost like 21 days non-stop I've been speaking to multiple people. And this so much of hours after I spend, only less than 5% of the people whom I've talked to made sense. The rest of the 95% of the people, their expectation is how much would I make from this? How much, what is the guaranteed income that I would get? So they said algo trading is a fixed returns, how much fixed returns that you could give. So all these repeated inquiries, if you just compile it as an FAQ and then put it on a website, it can be easily addressed. Okay, so in the 6,000 people that I've interacted with, I know what are the maximum frequently asked questions would be. If I just post it there, and then people would see that, even if there is any doubts, I could post short videos. People could listen to that and understand it. Instead of having a support folks just to speak to those people, I can make them to work on strategies or work on content, developing a content which should eventually help them. So
Hmm.
that is why till date we don't have any telephonic support. We don't speak to users. We'll always ask them to send an email, and then the support team would respond to them immediately. But this saves a lot of time. Using this time, we can focus on other works like creating contents or writing an article, which would eventually help. So that is why I always say time is very very important.
When you say value of time, the only thing that comes to my mind is theta. So, what's your take on theta? Is theta? It's a hot topic going on Twitter, by the way, nowadays. Is
See,
theta an
with
edge
respect to
or not?
theta, I still do not understand much details. Like people who have been into markets, people who have studied mathematics in hard. The thing is, why some people will always mock about other people is because of two or three different things. First thing is there is always some set of people who don't know, like who don't actually who can't digest the fact that you are actually making money. And second thing, there is always some set of people who can't take rubbish. Like there is always some people who will speak, okay, this is what, that's what, this is a blah, blah, blah. But people who are listening to that, people who are having a higher IQ or people who have read all these gamma, thetas, blah, 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 they'll understand, no, what this guy is speaking is complete nonsense. It doesn't make sense. So obviously they'll troll him. Obviously they'll pull his leg. But the thing is whether it is theta, deca, or gamma. End of the day, whatever you are following, is it making money or not? If it is making money, it's good. If it is not making money, you have to figure out a way. Even though you speak all this that theta, gamma, or option selling, whatever the technical terms you use, if you're not making money, then it doesn't make any sense giving all this yarn about all
Hmm.
these theoretical things. So end of the day, what works for you might not work for the other people. So it is all about finding ourselves. So that is what it is mentioned in the No Market Wizard book also. Even though Jack has interviewed multiple different people, the one every single guys has their own different way to approach the markets. So one thing would work for him, the other for other traders it might not work for them. So we have to find out what is really suitable for us, and then we have to stick to it. So be it option selling or be it option buying, anything that could make money. But end of the day, we are always looking at the end point. Okay, this strategy is giving me this much profit. But before you see, in order to reach that end point, market would always go down and give you kind of drawdowns. So find out what is the maximum drawdown that you could actually handle. Accordingly, plan your capital. Accordingly, you deploy it. Then only you would be able to reach that end point. If you
Hmm.
only focus on that endpoint and run a strategy, definitely you will not be able to reach it when it goes into a deep drawdown. So that is the problem. So people always say it, right? Simple things work. Simple things work. But what people don't say is simple things could give you prolonged drawdowns.
Uh,
People don't understand that. Even if you consider Bilton's hedge fund that he's been running with millions of dollars, he has gone through multiple drawdowns of more than 25% drawdowns more than 15 times. And there are periods where his performance is underwater for more than 3 to 4 years. Eventually, it recovered. So, $1,000 invested in this fund in 1970 is almost $1 million now. Same $1,000 invested in S&P index would be around just $1 lakh. So he has beaten the index to a greater extent. But how many of us would be able to sail through these drawdowns? Who would be able to handle this prolonged time drawdowns? That is the point.
I think that's part of the process as well. If you don't uh, know that how you are going to react in your drawdown phase, the probably then strategy is not fit for you. So
Exactly.
it's that's what I think Vishal also says always, that your strategy is a extended version of yourself eventually.
Yeah.
And uh, that is why I also feel Twitter is a noise, has become somewhat of a noise, because everyone has their own opinion and they're very strong about it. They're throwing their opinions. Like I used to get this Stockmock thing so often when we launched Stockmock, Kiru. By the way, just talking about Stockmock, I want to officially say thank you to you. And I'll tell my listeners why I'm saying thank you to Kirubakaran. My first interaction with Kirubakaran happened like this. I was getting calls regarding some questions from some of our users. It's in the early 20s, early not this 2020s, early 2020s, and I was getting a lot of questions, mails, and messages. I was having a telephonic support, so I was calling them, and I generally asked them that since we are doing zero marketing on Stockmock, how come you are getting to know about Stockmock? Okay. And back then, most of the people were saying it's through Kirubakaran. I said, who is Kirubakaran? Okay. It's just like that because I knew you, but I never knew that you were promoting or you were doing something about Stockmock. And then after you 1 2 months, I realized that, wow, how come everyone is talking about it? Then I searched about you. I read probably couple of posts on Quora where you were explaining in detail about Stockmock and their results and were mentioning Stockmock there. So you have been an early propagator of Stockmock. So that is why a big thank you from my side.
Thank you, man.
Yes.
See, when I get to know about Stockmark, and that was the first platform, which is kind of a no-code platform where you could backtest a simple notes, any option selling strategies, and I really liked it, and I really loved it. And obviously, whatever things, I really love writing about multiple things, be it markets or be it about products or movies. So when I first came to know about Stockmark, and it was a no-code platform where it made my job easier. So actually, it solved my problem. So then just wrote, see, this is what I have been doing earlier with that to write multiple codes. Now there is no codes needed, and just this is a simple strategy, and this is the overall practice. I just wrote it, and I never thought that almost more than 1,000 people would refer to those link and they will join to stock market. But it really helps. So when it solves a problem, obviously you don't need to do any marketing. People will do the marketing for you. But the thing is, why did you keep stock mark as title? No, because you're not doing any stock strategies. It is always index, right? Why the title is stock mark?
It's it's a long story around it, but I love keeping. I don't know why the mock around it. This is not my first product, by the way. Stock mock. It's my fourth product, and earlier products was also related to mock
Oh,
DJ, Algo mock solutions, and
oh,
that's why I randomly kept it. Let's keep it stock mock. So it just clicked. I never knew that it will took a fly because, as you know, my intention was not to launch this product to keep it as a business. My intention was to just help some people find that simple things work and don't get scammed. But that's for
and
the
this
later
is one
stage.
important lesson. See, people, even though they have a product ready, they'll not launch it because they're waiting for the right name. They're waiting for the right domain name. See, you have you have proved that actually name doesn't matter whether you are able to solve the problem through your products or not. So whatever name you keep, be it Zerodha, nobody would be able to know what Zerodha. There is no stock involved. There is no strategy involved. There is no anything involved with respect to Zerodha. But still, no, they are being the number one company and
True.
number one stockbroker in the world. Similarly, Stockmark has been used by multiple people, but the name doesn't matter. So as long as it solves a problem, name doesn't matter. So if you're a person, an entrepreneur who's waiting for the right name, don't wait for the just go ahead with it. Whatever names that you currently have, just go ahead with it.
Right. Very much right. Since you are going in the direction of entrepreneurship, I want to ask you one question. I have an answer for this, but I want your opinion on this. Um, you're doing an entrepreneurship and you're doing trading journey as well. Okay. Not just with you, you are helping many people join your bots and other things, and you're getting to know how they are doing the strategy. What are the common things that you see in both of these journey, entrepreneurship and the trading journey, and how is one helping another for you?
Okay, okay. I'll just share this. Do you know this person?
Samuel Brandon? No, I don't.
See, Samuel Brannan, even I do not know this guy recently, but only I came to know about him recently when I studied an article.
Okay.
See, during 1850s, there was a gold rush, a California gold rush that happened, where
Okay.
people found gold, literally, gold in just by mining few meters in California,
Mhm.
and that became a sensational news. Like everybody was out there to California. Many people, even around the world, were traveling to California to
Mhm.
dig this California mines so that they could take gold out of it. Literally, many people were doing almost 3 lakh people back then traveled, and still California has the highest immigrants because people who traveled back then stayed there from all other Asian countries and other people. Because the gold was there, more people came in. They wanted to get the gold and they wanted to dig deep and get rich quick. And there are a couple of people who did that and they were able to make money. But Samuel was the first millionaire in California, not by digging the gold, but by selling equipments to dig gold. He
Hmm.
made millions just by selling those equipments, like whatever the shovels and whatever the equipments that is necessary to dig. and mine the gold. He used to sell it. And Levi's is also a company which started back in 1850s, because those miners who were working in gold mines, whatever the clothes that they were wearing was not well enough to put all those equipments in their pants. So they created this jeans material and then they started selling it. And Levi's became a $1 billion company, and Samuel became a millionaire just by selling all these tools, which would help you to make gold out of it. But if you look back and see the money that people are actually making with respect to trading, versus the money that people are trading, making money through various tools, like my own platform, C Square of Bots. I have a platform to sell. You have a platform to sell like Stockmock. Like there are multiple platforms like TradeTron, Algo, Bulls, Quantman, and even consider Zerodha. Nathan he himself is a trader. Nikhil was a trader, but eventually they started Zerodha. But if you compare the money that they are making versus trading versus running a Zerodha, obviously it is 100 times higher. Running a business, if you are able to scale it up, that is going to give you, that is kind of $1 million business. Trading is not going to be, $1 million business. It is always will be there, but it is non-linear. There will always be, it's not a steady source of income that you're going to generate. There will always be period of a non-income. There is always be a period of income. But over the long run, that is going to help you out. But if you have the caliber, if you have the skill set to do this as well as to do that, then that is a deadly combination. And because not everybody could build platform. And second thing, not everybody could sell a platform. You can't just simply go out there and sell. Just because you have a product, it doesn't necessarily mean that people would come and simply buy your product. So the right way to sell the product is to always what you can't directly go and come start using my platform. This platform has given you the highest profits. If you do that, then people will be very reluctant to come. The right way is always, it's just like Nitin said, educate and then execute. So the mistakes that I used to do earlier was, I have a platform, but I did not educate the users. I did not tell them about all these drawdowns. I did not tell them about losing streaks, what the right mindset that you need to have. So obviously people will not stick to it. So when you are selling your platform with the greed, like asking them, see, if you use my platform, you're going to make 30%, 40%. If attract them based on your own greed or based on the greed factor, they will come in. They'll come in with a lot of people. A lot of people would come in, but they'll not stick to you. But when you try to attract them with no fear, stating, see, you could make money, but there will always be a drawdown of 20%. There will always be a drawdown of 30%. You can face 10 consecutive losing stakes. Then you are preparing your audience, then you are preparing your customers with the right mindset when they come to the platform. Then in spite of any down movements, they'll stick to it. So even though the number of people that they are coming to your platform is less, they'll stick to your platform. But the other set of people, when you're trying to lure them based on greed, they will not stick to your platform. So end of the day, there is always a potential of making higher money with respect to business. So if you actually want to know what is the right target audience, target people. So there is totally 500 million PAN card holders in India. So 500 million people have as their own PAN cards. But out of that, just 8 crores, 8.9 crores or 9 crores people have Demat accounts so far. So if you consider the growth between 1995 to 2020, almost for 25 years, we had only 4 crores Demat accounts, just 4 crores Demat accounts. And from 2020 to till just in 2 years, the number of people has increased exponentially. Additional 5 crores accounts has been opened. So what we were not able to achieve in the last 25 years, we were able to achieve just in the last 2 years. That could be because of rise of geo or rise of internet mediums, or rise of other platforms. And this medium is expected to grow 30% year on year going forward. That is the projected expectation. So obviously, the complete trading industry or investing industry or the broking community would tend to grow up exponentially. So if you are rightly positioned and if you provide the right solution, and obviously if it is making profits for them as well as it is making profit for you, then it is well and good enough to run that business. So entrepreneurship and trading will always be, a different ball game. So people will always say, do what is right for the people, right? But actually people, they themselves do not know what is right or wrong for them. So that is a problem. So just like I think Steve Jobs said this, I think, when they were building an iPhone, people were asking him, why are you, creating an iPhone? Nobody would want that. Then Steve Jobs said that actually, as long the moment you create and give it to them, then they'll realize, okay, this is what they wanted. So that is what would happen with any kind of entrepreneurship journey also. People actually do not know what they want. But the moment you create it and then give it and then explain, see, this is what it all it does, eventually they'll understand it and then they'll stick to it. So with respect to trading, how it greatly helped is, see, when you are actually, actually entrepreneurship doesn't help me with trading. The trading mindset greatly helps me with entrepreneurship.
Right.
The moment start trading for quite a long time, the emotional factor would be completely, like you would be able to see a vast difference. Like when I was trading earlier, my wife could see whether I'm in a drawdown or not, seeing my face. Okay, this guy has lost money. Okay, this guy has made money. If I made money, I would be so excited by the end of the day. If I lost money, I would be so down. By 4 o'clock itself, I'll be getting into my laptop and again doing back testing, again doing tweaking. But these kind of losses and profits, once you start facing it for quite a long time, then no, you wouldn't wouldn't show that in your face. You could easily handle those emotional part, and that would really help because you will not have any expectations. You don't have, if you have a expectation of trading outcome, you can't predict the trading outcome every now and then. Nobody could say that whether it is going to be a profitable trade or a loss making trades.
Mm.
But over the long run, you can make profits, but this prediction will be completely moved out from your mindset. So all I have to do is just follow the process. So when there is a process, there will be a progress. That is what I always say. So the moment you have this process in trading and then you follow it, you could see the progress literally coming in front of your eyes. And you apply the same logic with respect to my entrepreneurship. If
Mm.
I'm trying to add a feature, or if I'm trying to add a strategy into a platform, I'm not going to expect a result immediately.
Mm.
It is going to take some time, but all I have to do is just follow the process. Okay, Monday to Tuesday, say for an example, the podcast that you're doing is actually a process that
Mm.
is going to help your users because you're educating them.
Mm.
You're not going and creating a YouTube video stating, come and use my platform, this is the best backtesting platform.
Mm.
That is not the right way to sell a product. What you are doing is the right way, where you are going to educate the users, giving them values, and then people, based on the learnings, like who are sharing in your platform, they'll get to know the importance of systems trading.
Mm.
And when there is an importance of system trading, obviously backtesting is one single most important factor where you have to create and then go, and that is where you are having the right platform. So
Mm.
this is how a right process should be with respect to entrepreneurship.
Nice. That's so nice. I got my point here. Follow the process for the progress. That
Exactly.
is that is the key part. I think if somebody wants to take away for the last 5 minutes, it's very important, crucial. You can only progress once you have the process in picture. Otherwise, you will just follow nothing and you will probably land nowhere. So it's really very important. Thank you for this entrepreneurship talk, and let's talk a little bit about strategies here. I know there are so many strategies out there in your trading bots platform as well, and I think you are making one of the platforms where people can create their own strategy and Algo trade it as well, right? I think that's called something like OptionX.in.
Yeah, right. So that is option X, where actually we created that platform focusing initially, targeting all those 80% of the users, where you just have to go to optionx.in, where it will automatically have all those inbuilt strategies. So 90% of the traders are trading straddles or strangles, those kind of platforms, right? So we wanted to create, a simple strategies execution tool where, for an example, if someone wanted to trade a short straddle strategy, they'll just have all these, for example, they'll have, they can choose their put option or call option, whatever they wanted to select, whether it is weekly or it is monthly. They can select all these things. They can specify their own targets. And once they fill in all these necessary parameters, they can just click on execute. Like for an example, I clicked a short straddle strategy. And if I wanted to enter a stop loss, I'll just enter 25% stop loss here for both call option and put option. I'm entering a stop loss of 25% and I'm going to execute a short straddle bank nifty strategy. And just I click on trade, that would prompt me to select my broker. Say suppose if I selected a Zerodha, then this would automatically calculate what is the bank nifty current price. Accordingly, it chooses the ATM and then accordingly creates a basket of orders for it. Market order, I mean the entry order and the stop loss order. Once you click on place, it is automatically going to get placed. So most of these strategies, like they're time-based strategies where people wanted to execute a specific strategy. Say, suppose I'm going to execute a short strangle or a high and fly. If I have to trade this manually, then I have to enter 4 different legs. And by the time I enter one leg, the C could have moved. By the time I enter PE, the other leg could have moved. But by doing this, just by clicking and execute, you would be easily able to execute your strategies. And even the Stockmock users, for an example, this is my Stockmock platform where I created a strategy where I've specified like ATM call option and put option, the same 25% stop loss I've mentioned here. All I have to do is just copy this strategy link and I just go to option X here and I paste it here. And once I click on submit, it would automatically populate that. So those strategies automatically populated, and I just click on trade and I just execute it. That's all. So once backtesting is done in Stockmock, you can just directly execute it. So this we have just made it as a complete free tool where you can click and execute. Soon we will add this execution, automated execution, where people can schedule it. Say suppose if you automatically wanted to schedule at 10 o'clock or 9:30, it should automatically run. Now you're clicking and executing, right? So you have to click and execute. Going forward, this automatic execution will be there. Once that is done, then it would be much easier.
Understood.
So we always wanted to keep it separately, like click to execute separately as well as automated execution separately. So tomorrow people can always use this click to execute for free, but automated execution, even if you wanted to charge it, we have different plans like charging just 1 rupee per order. Like when just like Zerodha disrupted with 20 rupees per order. We thought we'll change it.
Okay, so in this way, I have a question for you, Kiru. When we launched Stockmock, people were happy about it, but there is also a confusion or a dilemma when they are comparing two strategies, which both of them are giving good results, but there are a lot of parameters to consider. Okay, like their average day profit, drawdown, expectancy, number of losing trades, RR ratio, losing months, day wise results, so many things to consider. So how do you recommend our listeners to decide upon the different strategies that they are backtesting so that they can finalize that this is what I want to trade, let's say on option X?
Okay. See, basically, earlier I used to compare multiple parameters like, what is the overall returns or what is the overall drawdowns or what is the drawdown to, returns ratio. All these are mathematical parameters.
Right.
And all these things can just give you the overall view of the strategy. But end of the day, when you are following a strategy, it's all about yourself. Whether will you follow the strategy or not? That is the first foremost rule that we have to focus on. And how do you decide whether you are going to follow the strategy or not is based on one single ratio that I always say. That is nothing but find out what is the total number of days a particular strategy is in drawdown. Say suppose the total number of trading days that is considered is 200 days. And the number of days that the specific strategy is in drawdown is say suppose 50 days. Divide 200 by 50. So the number of trading days divided by number of days the strategy is in drawdown. Higher the ratio, better it is. Lower the ratio, not much better it is. Because the more and more you spend a specific system on drawdowns, the more and more you lose conviction. And the more and more you lose conviction, eventually you will not follow it. So even though that might give you the best results, you might not follow it if it is being in a prolonged period of drawdown. So you have a two strategy, and one is having just number of days is just 10 days under drawdown. The other one is 30 days. But this one is giving you higher profit. Still, the probability of you sticking to the strategy is very, very less. So you're better off to trade with this strategy. So mathematically, you can easily find, okay, this has given highest results. The maximum to return ratio is this is better. But still, whether you are following it or not is what is going to decide the overall profitability factor, right? So psychologically, I would say this is the best aspect. Other than that, if it is mathematically, you have expectancy, you have no returns to drawdown ratio or overall net returns, average profit per expiry, all those things are mathematical parameters. You can always rely on that. But if you really wanted a psychological answer, this is the best one.
Nice, because even if the strategy is awesome, but you started your strategy and it goes into the drawdown phase, probably you'll not stick to it.
Right.
So that is why that's really nice. I love this conversation, Kiru, with you because you touch so many aspects of entrepreneurship, trading aspects, strategy aspect. You interchanged me with Warren Buffett as well without realizing that I don't have time. That's awesome. Is there anything that you want to convey before we conclude this conversation? What do you want to tell to the newbie users who are joining this market? The do's and don'ts.
See, with respect to there's a couple of things. I never spoke much about investing. So I always say this to all my new users or people who have always interacted with them, or people who are just getting started with their career. See, I don't. People always think that with respect to investing, only when I clear off all these EMIs, I'll have enough money to invest. Only when I clear off all these dues, I'll have enough money to invest. So that was the same thought process I also had. And by the time I realized investing is really, it's all about starting early, then how much that money that you are actually investing per month.
Hmm.
Even though I'm investing a higher amount of money every single month in SIP, if I have started with a very little money during my early stage, then the corpus that I would have built would have been much higher. So they always say in any article that start early, investing early is all good. But people would not realize that okay, I don't have much money because I have other commitments. So for them, the right approach is always to tell them that. So the right approach is always to tell them, see, you every single trader or every single salaried person would be having their own PF, right? Provident fund, which gets deducted, which you get at the end of the retirement corpus. So whatever money that a PF money that is getting deducted in your salary, invest the same money in markets, be it in, like, say, my own friend who has been working in TCS for 15 years, and he has his own PF. When he started his income, when he started with TCS, it is almost 2,000 rupees or 3,000 PF. Eventually, it increased to 5,000, 6,000, 10,000, 50,000, whatever the money. Over the experience, it grows. But if you could invest the same money in a TCS share that you have been working, so 15 years is a long commitment that you are relying on your own company.
Hmm.
And if you are relying on your own company, obviously the company is progressing. Just invest in your own same company, the same PF money.
Nice.
So obviously the money would have been multiple by, be it Infosys or TCS, it would have been multiple by now to a greater extent. So the money that you make from your PF would be 10x, 20x higher than the money that actually you make from investing. So investing is what gives you a larger income. But we always focus on this shorter trading income. We tend to miss it. So the first advice would be start early, and you don't need to confuse so much. You can start with the index funds if you don't have no one time to analyze, and don't put so much of money. Just replicate whatever the PF money that you're getting there.
Hmm.
That would give you good returns. And second thing is always focus on the rule based approach. So as I said in the beginning, when there is a process, there will be a progress.
Hmm.
So follow that, and then that. So if you are struggling hard to stick to the process, that is because with the higher capital that you cannot afford to lose. Reduce your capital drastically.
Hmm.
Trade with just like this Tony Saliba one lot trader. Stick to the process. Follow the 100 days homework that I said. Where if there is a process and you have followed it, give 1 mark. Not followed it, give -2 mark. Do that for 100 days.
Hmm.
So once you do that, then you will realize whether you're sticking it or not, and then you can put up additional capital and then trade it. So this is the advice that I would give. So always focus on these
Hmm.
process things, and then eventually it would help you out on the long run.
Nice. This is an awesome framework. I think we all should follow before switching the strategies, before deciding on anything, before scaling up. And that's really nice. That's so nice of you, Kiru. I love this conversation. Thank you for coming on the podcast and taking out time for this. I really enjoyed it. Thank you so much, bro.
Thank you so much, Nitish.
Thank you. So,
Thanks, man.
I hope you all have enjoyed this conversation because I love this conversation because it has so much, Kiru has so much to offer to all of us based upon his experience with the trading markets, his entrepreneurship as well, because I learned about some entrepreneurship tips from him as well. So if you like this conversation, do share it with your friends. And don't forget to hit the subscribe button on our YouTube channel because that is very important for me. Okay. Do take care of yourself. Bye bye.